Okay, let's talk about Havells India's latest results. They're not quite what you'd expect.
So on one hand, profits went through the roof, but on the other, the stock price totally tanked. What gives?
So what's really going on here? To figure it out, we've got to dig a little deeper into the numbers.
All right, first up, that big profit number. It's not as simple as it looks.
The headline was a massive 734 crore rupee net profit. That's a huge jump of over 40%.
But, and this is a big but, 283 crores of that was just a one-time gain.
Yeah, this wasn't from selling more stuff. It was basically a paper gain from an investment.
Now, if you look at their actual business operations, it's really a tale of two different companies. You see, Havells has a lot of different divisions, and some did great, while others, well, not so much.
Let's start with the good news. Their industrial business was on fire thanks to big infrastructure projects. I mean, their cables business jumped a solid 14%, and switchgears did really well too.
But then you look at the consumer side of things, and the story completely flips.
Their Lloyd brand, for ACs and stuff, revenue plunged a whopping 19%.
So what happened? Well, management is pointing to a slow start to summer and people just not spending.
And this is why the market got spooked. Investors saw right through that one-time profit gain.
At the end of the day, they missed their revenue targets, and that signals a real slowdown.
It just goes to show, real sales matter way more than a one-off accounting boost.
And the result? The stock took a nosedive, dropping almost 7% right after the announcement.
Predictably, the big brokerages started slashing their price targets and even downgrading the stock.
So, where does Havells go from here? Let's take a quick look at what's next.
It's a real balancing act. They've got to lean on their industrial strengths while fixing the consumer side.
Which really leaves us with the big question. Can the strong part of their business carry the weak part?